Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Carol Massar. We're counting you down to the close, and we're doing it live from the stage at the Milken Institute Global Conference in Beverly Hills, California. Welcome to our audiences across Bloomberg Television, Radio Originals, and those folks, Carol Massar, streaming on YouTube.
Oh my God. You and I were talking before we got started. It does feel like the tone here at Milken has changed.
Yeah.
And maybe it is, the focus on what's going on in regionals in the markets. They're just getting decimated. Pac West, we're talking about Western Alliance. Chris Alma of CalSTRS was just on with us, and it was funny from his perspective. He's like, well, wait, who are these banks?
Yeah.
This guy oversees, more than $300 billion in assets.
Yeah.
And just how these unknown banks can really unnerve, if you will, investors. It's pretty remarkable.
And it unnerves a lot of investors, and I think we heard this from Larry Summers, the former Treasury Secretary on Bloomberg Television, talk about this idea of sentiment, confidence, right? So it's not so much the contagion is whether you have any money directly tied to any of those banks. It's about the broader concerns about, can I really trust the system? And a lot of this isn't just about the banks. It's about trust, or rather the lack thereof, in regulators.
No, absolutely. Exactly. Chris Hellman also talking about that, this concern about sentiment and whether it's about the financial system, but even talking about sentiment when it comes to a recession. He says, who knows if we're going to hit a recession? We still have a job market that kind of moves along, if you will. But do we talk ourselves into it? And, Romaine, it's something that we often talk about. Sentiment can get us there.
Well, do we talk ourselves into it? Does Jay Powell talk us into it? I mean, he's been talking about this for a while. We're going to hear from him tomorrow.
Right.
I know there's going to be a lot of discussion about the banking sector and how the Fed is addressing it, but regulators broadly, but also how that affects their outlook for monetary policy.
I am curious to see if it affects them in any way. We're all expecting a quarter point, but we'll see.
Yeah, and I think the fact that you look at all the red on the screen that we're seeing here today, the idea that people are really rattled in public markets and in private markets, too. They may not admit it as loudly as you're seeing in the public markets, but it's certainly there. Let's get a quick check here on the closing bell. Scarlet Fu back in New York has a read.
Yep, we're down more than 1% across the board for the Dow, the S&P, and the Nasdaq, and it is a broad retreat here with more than 4 stocks lower for everyone that is up on the New York Stock Exchange. Volume is also up. It is up 30% from the 10-day average. And when you look at the sector performances, yes, this is a broad sell-off, but what's notable are the outperformers here. And you're seeing a lot of consumer-related companies hold up pretty well. Retail and consumer services are both two sectors that actually finished in the green, up by 0.5% at least. And that speaks to the consumer strength that we've been seeing across the earnings landscape. The consumer seems to be holding on, even as they are paring back some of their spending. Now, on the downside, energy stocks down by more than 4.2% at the moment here, as crude oil fell below $72 to a 5-week low. Banks, of course, getting hit hard as J.P. Morgan's purchase of First Republic, its assets, its deposits, has not calmed things down completely, with Pac West and Western Alliance losing more than 20% each. And of course, we are awaiting Ford earnings as well as Starbucks earnings, and we'll bring those to you as soon as we get them. Romaine and Carol?
All right, thanks, Scarlett. Great wrap up there. And I'll just add to Scarlett's market check there. I thought the moves that we saw in yields today, at one point the 2-year yield was down more than 20 basis points. I think at the end of the day, maybe only 15, 16. But the idea here of how much is being repriced into this market.
Again.
And again. Yeah, look at you. You're front running me again. I'm the one who's supposed to interrupt. But really,
in your mind.
But really, I know you're like here face to face, so I don't have the power over you like I used to. But in all seriousness, the idea that people don't know what is price discovery in a market where a 2-year yield, the safest debt instrument in the world, more or less, can move like this on a day-to-day basis.
Talk about something crippling. When you don't know the valuations of something, when you don't know how to price something, then what do? You hold back. And that's what we could potentially see. You talked about private credit before Scarlett did the numbers. I mean, private credit is everywhere. That's what everybody seems to talk about it. Talking with Chris Hellman again, like I said, what's the transparency in private credit? Do we need to be worried about the growth there? What's the oversight of that? So I don't know. Maybe that's...
Well, that's another conversation. I mean, you're not going to necessarily get an honest answer out of some people here.
No.
But there is a bigger issue here about the systemic risk baked into that, because you don't have the transparency. No. It's easy for them to say, we're long-term investors. We don't need to mark the market. If things are sour, we can ride this out. Can they?
I don't know.
We were talking with Victor Kozla a little bit earlier. He was talking about this idea that this could be sort of a prolonged, maybe 3 to 4 year sort of down cycle. And there are a lot of companies that aren't built to survive that long for 3 to 4 years in a down cycle.
We're going to catch up with him. I love how he says, distressed investor, but he also is calling himself like an opportunistic investor in this environment.
Yeah.
One man's pain is another man's gain, and we do see that in the investment cycle. But I feel like there's too many questions out there. The wall of worry and the things that we as investors have to think about, it's a lot right now, and it's hard to figure it out.
Absolutely.
No, go ahead.
Yeah, I was going to say the sentiment here in Milken, different than what we saw last year.
Absolutely.
Some of the same issues were here last year, but I think there was a sense that, this will pass, this too will pass. 1 year later,
we're not there
the
yet.
Reality is we're not there yet.
Yeah, exactly. A lot of good stuff. I mean, I was just looking at some of the comments here. Someone saying Silicon Valley Bank, this was an M&A panel, saying it felt like Bear Stearns, the collapse of Bear Stearns in the great financial crisis. You had others saying that, Silicon Valley Bank and First Republic, just another check mark in the uncertainty box. So these things continue to plague the thinking here, and it's pretty fascinating. I mean, yes, everybody's saying there's opportunities, but I just feel like there are just so many questions out there.
I do want to go back to the Bear Stearns thing, because we spoke with Ann Walsh of Guggenheim on Monday.
Yeah.
And she made this point, the idea that everyone's looking for that Lehman moment, but you sort of forget the timeline of how we got to Lehman. Bear Stearns in early 2008. I was working here at Bloomberg when that happened. And then, of course, it wasn't until the fall when you got Lehman. That was a long lag in between here. And I think that's what's causing some concern, right? People wanted a quick resolution to this. Yes. Even coming into Monday with the sale of First Republic. Okay, done.
Right.
But what? Is the book done or just the chapter in that book?
I don't know. It was less than 24 hours that we started to feel some uncertainty, right, about the other regionals as you saw them sell off. And I think it's so interesting. If you think about a week ago, we were going through, or 2 weeks ago, going through some of the big tech earnings, we were feeling, all right, some of these reports came in strong, starting to feel some optimism. And then here we are once again talking about the regionals, and it's definitely dampening investor sentiment in a big way. And there's momentum behind that trade.
Well, most of the people in this room are much more focused on the private world. I did ask them a lot about earnings in the public space and what we've heard out of some of these companies. And I think we have some earnings actually crossing the wire right now on the Bloomberg terminal. Scarlett, I think, has it for us. Scarlett.
That's right. We're hearing from Ford, and Ford has reaffirmed its full-year EBIT view for its different business segments. And of course, it just changed its business segments. It's no longer reporting according to region, but according to Ford Blue, which is its legacy business, and for Ford Pro, which is its commercial and government customer business, and for Ford Model E, which is its EV business. And there it is reaffirming its full-year view. In terms of first quarter adjusted EPS, 63 cents was the reported number. The consensus estimate was for 42 cents, so much better than expected. And you can see the stock moving up by 0.7%. For the full year, Ford says it sees full year adjusted free cash flow at $6 billion. It had previously also indicated it would see about $6 billion in free cash flow. So that is pretty consistent. And so no new news there. And in terms of full year adjusted EBITDA or EBIT, no duh, $9 billion to $11 billion. The consensus estimate was $9.5 billion. Let's move on to Starbucks right now, because that stock also reported, that company, I should say, also reported adjusted EPS for the second quarter, 74 cents. That is 9 cents better than the consensus estimate of 65 cents. Revenue in the period, $8.7 billion. Analysts were looking for $8.42 billion. So better than expected on the quarter that just ended. In terms of the breakdown, international comparable sales up 7%. Analysts were looking for 1.5%. Of course, China is a key part of this international business. And in China, comparable sales rose 3% when the consensus estimate was for a drop of 10%. Of course, China coming back online, the economy reopening after those 3 years of COVID restrictions. Comparable sales for Starbucks rising 11% in the period. The estimate was for a 7.3% gain. Nevertheless, you look at Starbucks shares, they're dropping right now in after hours trading. I'm going to send things back over to you as we figure out what's going on with Starbucks stock price. Romaine?
Makes sense. Those numbers look fairly strong for Starbucks.
Well, they look very strong. You talk about what was 11% growth or something, but the idea here that investors aren't looking just for growth anymore.
No.
Let's be clear about that.
I think you're absolutely right. And one of the other concerns is, wage costs have gone up. That's certainly going to compress margins. There's some concerns about that. They're looking at cash flow, balance sheets.
Yeah.
So even if you see some outperformance, it's not enough for investors.
And what are investors interested in right now, right? Like if you look at the economic environment, do you go after a consumer company, like a mature consumer company to be sure as well, or do you go for something maybe a little bit different that offers you maybe a little bit better cash flow?
I don't know. I think, well, maybe, but I think people are looking for safe, less risk.
Is Starbucks safe? I know you're addicted to Starbucks. How many Starbucks drinks do you drink a day?
I drink like the office coffee, buddy.
Office coffee?
I make coffee in my, hotel room.
You can finish that thought. It must not have been good, which is why you paused.
I don't know. I think what's interesting is you have an environment where people are also talking about look for dividends. Like that's a safer play.
Yeah.
Apparently,
Carol Massar needs a cup of coffee.
Apparently, I need more.
I think we're supposed to wrap Carol Massar.
All right, that is a wrap. That'll do it for Romaine and I. Catch us again tomorrow at Milken, same time, same place. We'll do Beyond Bell on all our platforms. We'll see you tomorrow.